Well, Mr. Tulsian of sptulsian.com joins us now to give us his view on a whole host of stocks. Good morning, Mr. Tulsian, and compliments of the season. I wanted to ask you, sir, your view on the markets firstly. We're likely to be in for a bit of a tizzy ride. Any sector, stocks that you'll be looking at to get into?
Anuj, I think, Nigel, I think the situation is seen to be bad because of the global factors, and maybe market may get bottom out for our market maybe by today or tomorrow. Because whenever we see that, actually, if you take a call on the December series, it has started on a weak note. Post 11 December, we have seen a good rise, about Bank Nifty having rose about maybe about 1200 points. And even Nifty has risen by about 475 to 500 points. But the situation seemed to be, taking away, the entire gain has been taken away for this December series. And actually December series was expected to be flattish. But I think that things having bottomed out now, and going forward, if you really take a call, if I first take a call on the situation going forward for the January, the only caution is that January series is of 5 weeks, and generally we hold a view that 5 weeks always gives you 2 rounds of volatility, that is unpredictable volatility. So that has to be taken care of and that has to be factored in, but otherwise outlook is soon seen positive for January series for the simple reason that market is seen to be underowned, bottomed out. And if you really take a call now going forward on the Indian conditions, the Brent having corrected to a level of about 51, rupees is quite stable at 70.2030, and bond yield also quite low at 7.2, 7.3. All these positives are going to get reflected into the share price at some point of time. So maybe this pain, because I always take this view also that whenever the weakness starts, that weakness ends with the expiry as well. So maybe this caution is only sealed till tomorrow. But January outlook is seen positive. But as I said, that January series, because being of 5 weeks, we need to be little careful because sudden profit booking and sudden volatility may come in, which generally is seen in case of 5 week series.
Okay, that's important caution, sir. Thank you for pointing that out. Clearly, the Bombay slightly better than usual winter that we have is affecting Mr. Tulsian's voice as well. Sir, I wanted to ask you about first some specific news that has come over the last 2 days. Max India, now how should we approach it? Do you think the holding company discount goes and it reflects the hospital property better? How would you approach that stock?
See, Lata, that may be the case, but generally if you really see this whole process of merger, Max to Radiant Life, Radiant Hospitals and all that, this whole process takes about 8 to 10 months minimum, and if you really take a call, the people start losing the patience. In fact, we have seen these kind of instances happening in many cases, many mergers where the things have all corrected in spite of that merger seemed to be positive. And that's what I've said on Monday afternoon also, that I'm not keeping a positive view now on Max because the share price have already risen from maybe about 65 levels to 80, 85 in this last maybe 1 month or so in anticipation of these news to be happening. And probably market will go for the profit booking, and I won't be surprised to see Max India share correcting by about maybe 10-12% in next couple of months. So those who have been holding it, news have already been played out, and it is better that you exit from the stock now and if you really want to play on the pure healthcare space, which is not a bad idea, one can revisit the stock maybe after 6, 7, 8 months because this whole process is going to take 8 to 10 months time.
Mr. Tulsian, I'm looking at Lupin, a brokerage note coming in today. Phillip Capital, they have a sell rating, target price way low at around 640 odd. Your view on the stock is corrected from around 1,000 to around 830 rupees.
See, Nigel, in fact, Lupin has never given any kind of comfort, and if you really go by the management commentary, also allow FY19 to first come to an end, because management has been categorical in saying that don't expect any improvement in FY19, and I'm not taking the resignation of the CFO or the director of the company, but even if you take the situation, you need to have some kind of positive news flow seem to be coming in the stock, which is seen missing. So that's what we have been cautioning. Maybe in case of Dr. Reddy, Lupin, and maybe the Cipla kind of stocks, they have never participated. And even if you have seen any kind of rally coming in, it has not been sustained. And that's the reason we have been very selective in taking a call on pharma stocks, maybe like Oro Pharma, Glenmark, Divi's Lab, and Biocon. So you have to be very selective, and I think that pain points in Lupin are likely to continue at least for next 3, 4, 6 months.
Fair point, sir. Mr. Tulsian, we are just coming back to you. Want to get some F&O strategies as well. We have lots more questions for you. Amit Gupta of ICICI Direct has joined us for some F&O strategies. Good morning, Amit. Thank you very much for joining us. Merry Christmas to you. What would you trade today?
Yeah, good morning and Merry Christmas to you and all the viewers. See, for today, in the buy side, we have the PSU banking space because I think the time has come as we are moving towards expiry. More short covering is likely to play into the PSU banking because, as you rightly said just some time before, the yields have come down and the rupee is still in the appreciation mode. So my sense is those stocks which were a little laggard, because Bank of India we have already seen in the last couple of weeks what kind of short covering this stock has seen. And if you look at particularly Syndicate Bank, almost 15% of closer we have seen in the short positions, and now the rollovers have also been on the lower side. So it may not be a move for the next couple of days, it may be a move for the January series as well. So my sense is it was taking quite a hurdle around 36 levels. Once it is above this, so the trend may be on the higher side for a target of around 41 or 42. So just buy this stock. And on the lower side, if you see the delivery pickup, so the delivery pickup has been almost 35% higher than the last quarter. So my sense is that the investors or the short-term traders, they have started buying this near 35, 36 levels. And that is where this momentum can pick up now. Another one is Petronet, that is also on the buy side, because this is another oil and gas stock which was quite laggard around 200, 215 levels. It has started picking up. In fact, now it is holding above 220. Now 220 was very crucial because this is somewhere, this was a level where the call writers were very aggressive and they were writing these positions against the cash holdings. So once the stock is above this, in fact in the last two trading sessions, we had seen the market falling, but this stock has held above this level. So my sense is it is another one which is due for some short covering, and this short covering has already started. Now around 18% of closer we have seen, but this can more aggravate because I am seeing the stocks like Engineers India or GAIL, they have also started performing. So Petronet can move towards 234, and for the last many months 200 or 215 was the level where, you know, it had formed a very good base. Previously also we saw whenever it declined there, good delivery buying was seen. So the same pattern is again coming up. It can push the stocks towards 234, 235. Okay. Now in the short side, because what is happening right now in the market, the heavyweights, certain heavyweights have got little sluggish. So in the same category, I will keep Reliance Industries, because there is a clear trend of liquidation of long positions. Now it felt some fatigue near 1140, 1150, and that is where I think the call writers became very aggressive. If you look at the positions around 1140 or 1120, it was quite high in terms of number of contracts being added in the call side, which was majorly in the short side because the volatility that time was also higher. So they have eaten that volatility, and now they are pushing the stock little down. In the last session, we saw it close below 1100. So my sense is if you are shorting the stock near 1090, 1095, the stock can drift down towards 1060. Now these are the levels 1050, 1060, where it is likely to form more base, it may spend more time, and then the pull-up may start afterwards. Okay. But for the timing, it is looking a little weak in the short term.
All right. We'll leave it at that. Thank you very much, Amit, for joining us with your strategies today. We have to take a quick break. We are coming back. We will have the pre-opening rates, and of course, we'll have more experts joining us on the bond markets as well.